Hello, everyone. Good afternoon, and welcome to our midday update for Wednesday, December 14th of 2016. Today's a really important day. Want to remind you that information is for presentation purposes only. The risk of trading markets can be substantial. You should consider if doing such is in your own best interest financially, and market involvement or trade activities can result in loss you're responsible for. I didn't really read it verbatim. Now the lawyer's happy. We could start our presentation. We got an exciting day today. Today's one of the days I can promise you there's going to be volatility of some sorts. Where the market's going to go, I don't know. We had a massive discussion about that last night in our futures course about having no bias, how bias is going to get you killed in this market. If you missed it, you could still register and sign up for a class and watch the archive lessons. We still got about 4 lessons left live on how to trade futures, day trade them for a living, the same way that the professionals do. If you go to any proprietary trading shop, if you go to Goldman Sachs and sit on the desk, he's going to be doing the same thing I'm going to teach you. But that stuff aside, what do we have today? Today we have the S&P's 500 giving up some of these gains, all right? I wouldn't say bears are getting paid quite yet. I mean, they're a little happy. They're smiling a tiny bit that they're getting some kind of price action in their favor. But if anything's anything, we know that these dips get bought into and prices rally. All right, I've read a lot of reports on the Federal Reserve's intention to hike rates and what impact that would have on the market. And virtually every investment bank is saying no matter what happens, the market's going to close in highs and continue upwards on this FOMC day. It's been anticipated since last September. All right, just to remind you, this is how it works. At 2 p.m. today, they're going to start with the FOMC economic projections. It's a statement, and the federal funds rate that gets released. The expectation right now, everybody and their grandparents and their uncles and their pets are expecting a hike of at least a quarter basis point. All right, or 25 or a quarter point, 25 basis points. All right, 95% chance of that happening. I think she's going to do it. I don't think Janet Yellen uses this kind of probability and says, nah, I'm not going to do it. She's really going to mess with the market and lose all credibility. The market is finally expecting it. She's jawboned them and primed them to expect the rate hike. I think it happens at 2 p.m. It's a foregone conclusion. Wouldn't bet or speculate on that. Even if it's 95%, I wouldn't bet you that it will happen. I'm not without odds, because I don't trade speculation. I trade once actually the event comes out. I'll find an entry to ride that no matter where it goes. I don't have a bias. I don't have an expectation. All I have is a money maker that I use every day to print some money here and there. Okay, 95% of a hike. There is a probability at 5% that we get 2 hikes or 2 quarter points to make a half point increase or 50 basis points. That's a 5%. I think if this hike scenario happened and we raise 2 basis points, I think initially the market will get very volatile because it's unexpected. The algos will read the headline. They'll prime it. They'll work the bids. They'll work the offers. They'll spoof the crap out of it, and it'll do this. Might do this, might come down. I suggest you stay away from that. You wait for it to settle, and if it's doing this and you find some support, get long. But I would wait for the first 15 minutes, and I wouldn't touch it. I think the more important part here is at 2:30 p.m. That's realistically where a lot of the professional traders are going to keep their eyes, ears, and mouse, I guess, open for that conference. Janet Yellen is going to start talking. And boy, can she talk really robotic. And if you could make it through that speech, I salute you. I'll probably fall asleep halfway through. I didn't get too much sleep last night. But the press conference starts at 2:30 p.m. She's going to have a lot of questions to answer. Yeah, exactly. Anthony would say that, and he'd be bang on. The most important information we don't have yet, and nobody has. All right, everyone thinks that somebody else knows what's going to happen. Janet knows what's going to happen. A few other people know what's going to happen. So what? You don't. All right? Unless you're part of her family and you bribe her or something, you're not going to know. And even if you did know, I'd be pretty certain you wouldn't be trading it the way you think you would. Knowledge often seems like a convenient thing to want to have, but when you have it, it makes you feel more uncertain than you did without it. Replay that. Here's the dot plot. They do. Like, hey, look, right now the interest rate hike is baked in. The market's near all-time highs. The market ain't scared of it. If we get a 0.5 hike, I think it might be a little more afraid. There might be some initial downside. Or my expectation is no matter what happens today, we're going to continue to go higher. And somewhere towards the end of December, early January, that's when the sell-off is going to happen. But not until we squeeze out some more people. There's still fuel in that upside fire. Here's the dot plot. If you don't know what the dot plot is, well, now you're going to know. It's very important. The dot plot is the FOMC voting members and how they voted for future interest rates, 2016, 17, 18, and 19. 16 is pretty much a foregone conclusion at this point. The majority of them voted that there's going to be at least a 0.5 to 0.75, so at least one hike. All right. In June, what do you notice? In June, there were more voters up towards the 0.75 to 1% range. That's dropped. Okay. That right there is dovish. Dovish means that there is less expectation for rate hikes, more accommodative monetary policy. If you look at the purple, in just about every single year going forward, they shifted to a dovish stance, except for the longer run. Heck, even the longer run, they shifted it more dovish. So the expectation of the dot plot curve has shifted all across the board to the downside, which means they expect to raise rates slower for a longer time period. That's dovish, all right? More free money for longer. What we need to see now is compare the September to the December dot plot. I can't do it fast enough. The algos are going to have that read within the nanosecond, and they'll be trading it. If you could read all of this and make sense out of it in a nanosecond and beat the robots, you go for it, and you try to trade that. I'm staying out. I'm going to see the chop. I'm going to see what makes sense and find out where I could squeeze some longs or shorts out of their positions and make some money. I need 3 to 5 points. I don't need 10. I don't need 20. I don't need 30 points. That's ridiculous to me. Anyone holding out for this kind of stuff, good luck to you. Because by the time you get 10, I'm going to have my 3. All right? If you get 8 and you're saying I have a target and it comes back down, I've already gotten my 3. I've still gotten my 3. I'm going to get my 3 every time you get your 10, and most of the times that you don't. Remember that. All right, here's the dot plot. This is what the Fed rate hike. This is what everyone's kind of narrowing in on. The dot plot and then the conference with Janet Yellen. She's going to have to answer some tough questions. I suggest you listen to that conference for many reasons, one of which it's free. You don't have to have any kind of subscription. What kind of data subscription do you have? Well, anything. You can even go on YouTube, and I think they live stream it. You go to federalreserve.gov, and you could probably live stream it here. In fact, I have before. There it is. Watch live today. Just click it. It's all you need. You don't need any kind of fancy schmancy subscription. Listen to what she says and watch the market. If you're not doing that, then good luck. I will be. So will everyone else that's trying to make money in the market. All right. That's the FOMC. I really think we get a hike. I think there's going to be some upside after that hike. There's going to be some initial volatility on the onset, but I think dips are going to get bought into. And after the YouTube update for the subscribers, we're going to dig a little bit deeper into some levels. I'll give you one level, 59.5. I've been watching that level all morning. Missed it 3 ticks. All right, got long on that dip. Then I had to do this webinar. I had to close my trade because I don't like to hold the trade while I'm talking. I like to be able to work the trade, and I missed a point or two. Who cares? All right, here's oil. Oil today, we had a massive number being released. Yesterday, we talked about the API data. That's a private subscriber release at 4:30 p.m. on Tuesday. Wednesdays at 10:30, we get crude oil inventories. All right, there's a draw, a build. We had a positive amount, a large build, meaning that despite talking about a production cut in January, they ramped up in the last week according to API. According to the DOE numbers, there was a draw. So there was a little bit of bullishness that got priced into that. It started at $52 a barrel even. Price rallied from there to about $53, just shy of it, and now it's back to $52.20. So we've gotten some upside from that inventory number. All right, here's something that you guys should be following with. If you're not following with this stuff, then I really, it's mind-blowing to me. You got to look at market correlation. Look, in today's market, I was looking to set up a long based on this. The green line is your SP 500 chart. The red line is NASDAQ, the NASDAQ futures. At around 11:30, when I picked this bottom and it started to rally, I got a few ticks off it. Nothing major, though. Here's what I was seeing. S&P was placing new lows. NASDAQ was not. It had started to rally a little bit. All right. That tells me that there's some strength from correlated markets. The NASI is the leader in this case. NASI wants to pop. All right. Respect these dips. On this low, we had a higher low on NASDAQ. Give it a shot on that trade. Okay. If you come out and tell me, George, I bought the S&P because NASDAQ was stronger and I had a 4-tick stop loss below, so I wasn't going to get butchered. I wasn't going to buy if it broke the low. I wasn't going to average in. I just want to take the darn trade for it to catch up like it did. You know what? I would have told you, a great trade. Whether you win, lose, scratch, break even, make $1 million, lose $10, great trade. You start losing serious money and averaging in below these lows, I'm going to be pissed. But I'm not, because you took a good trade. Good job. Pat on the back. That's what I was waiting for all session. In fact, I'll show you. I got long here. And on these rotations, puked it. Took my one tick as I was going to start the webinar. Did I know it was going to go to the VWAP? No, I didn't. I had some certainty, but it looked like a traditional short squeeze. And we'll talk about that with the subscribers as to why and what the next best trade could be. But look at that. Off these lows, NASDAQ, while this low happened, like I showed you, did this. Okay. And that's where the trigger moment was for me to start getting long. Actually, it was back here. So I probably did this. Had some new lows. NASDAQ didn't go. Here we had a low that was higher. Took the long, gave it a shot. 61 to 63, half, 2.5 points. If I would have got my 3 points, I'm done for the day. I hit my target. All right. Make $1,500 to $3,000 depending on how you trade it. Good, get out. How much more do you want than that? All right, and it's still ripping the S&P 500. It's going to keep going. Into FOMC right now, I would advise you guys to not do much. Wait for it. We got 941,000 contracts traded. Can't even crack the million. We cracked the million at 11 a.m. yesterday on volume. So lower volume today. A bunch of shorts got excited in the morning. Now they're getting squeezed. I should be getting paid, but flat out, I'm honest, I'm not. And I'm a little frustrated. All right, so this webinar cost me money. That's fine. This is kind of what I signed up for. All right. Let's have a look at some more stuff. Let's flip this on to bonds. Bonds are starting to recover a little bit. I don't know if any of you guys track yields. You should be tracking bond yields too. If you're not, you're in a little bit of trouble, but not a lot. All right, look, here's a bond yield up to 2.74%. It was down overnight, but it's found some support at 2.735. If you go on a daily here on the bond yield, since about November, this thing has skyrocketed to 2.8 from 2.2. So everyone talks about, oh, there's no interest rate hike coming until December. The cost of financing deals as a corporation has gotten higher because bonds have gotten cheaper. So you got to pay higher yield for your cheaper bonds. Okay, know that. Follow the yield. A lot of people follow the TLT. That's just price. Can you do a trailing stop on market delta? You sure can. And I'll show you how. After a few more minutes, I'm going to end the YouTube broadcast and then we'll get down and dirty into some of the trades. I got to show you guys some stuff too on the strategy that I'm working, the long ES with options. I'm going to show you some more details, but let me just end the broadcast here in a few moments and then we'll get into that. I'll open the account. I'll show you guys some stuff. All right, S&P, here's my outlook for the day. We're going to probably continue higher. Can't tell you really. I don't have a bias. You should know that based on what I said a few minutes ago. Oil, I want to try to get long once this gap is closed, 51.40. We get that. I'm going to try a long trade. I think we got some more upside in oil. I don't think we're done yet. Dollar index consolidating. We had some accumulation. We had some public participation here. Now we're in the distribution phase. So we can still stay in this range. So I don't have any kind of idea on that or bias. I just know that we're trading at around a 14-year high around these 102s. So you hit a 14-year high, you're bound to consolidate a little bit. One expects this rocket ship to just go to the top. Runs out of fuel eventually. I'm going to show you market breadth, and I'll cut it off, call it a day. Here it is. Here's market breadth. The market has good breadth. Not breadth, breadth with a DTH. We're at 78%, and we're climbing on this breadth. Look at this. Market's going up, but so too is the breadth. We're now at 78.5% of stocks are above their 50-day moving average on the S&P 500. Think about what that says. All right, we start approaching some of these levels. You get either a slowdown or some selling happening, mostly slowdowns. So I think the upside is a little overdone. Okay, it doesn't mean it can't continue to be more overdone. It's a little overdone. Breadth is starting to hit some levels or getting close to some levels where it usually rolls over, at least temporarily. So follow market breadth. TradingView.com, S5FI is a 50-day, S5OH is a 100-day. You guys have a great afternoon. Wish you the best of luck. Trade this Federal Reserve announcement carefully. Don't gamble. Trade. Big difference. If you're putting a position on before the release, that's gambling. If you're trying to put on a position right after the release, with the algo is chopping you up, that's gambling. If you're waiting for the market to settle, looking at order flow and picking a nice location to get long, that's trading. Take care. Have a great afternoon and be careful out there. Don't get butchered. It would suck to lose a month's profit in one day today. That's what could happen, right? If you're not comfortable trading volatility, trade it on a demo account. If you can't trade volatility, that probably means you don't trust your strategy yet, or yourself, or your execution. If you're afraid of volatile markets, that's a bad thing. Good traders love volatility. Bring on the volatility. We're going to get it this afternoon. I'm excited. All right. Take care, everyone. Have a great afternoon. Subscribers, hang tight. Let's do a little bit of an update here and get a little deeper on these levels. One moment. Let me just end the broadcast. Take care, YouTube. I wish you all the best for the day.